What's going on, you guys? Dane the Mortgage Guy here with your 3-minute Thursday video of this week. Now, we've all probably heard the term conventional and FHA, and those are the two types of mortgages that most everybody gets. There's also USDA and VA, but we're not talking about those today. And we're not gonna talk about conventional loans either. We're gonna talk about FHA loans. There's a lot of confusion about what an FHA loan is sometimes, and I wanna be able to clear that up and make it so that it's less confusing for you who's potentially buying a home or even refinancing your home in the future as well. So, as usual, clock, info, disclosures, amazing mortgage company that I work for, and let's do this. 3-minute Thursdays start now. What is an FHA loan? Well, first off, let's talk about what FHA stands for in the first place. FHA stands for Federal Housing Administration. They are essentially an administration that insures mortgages through mortgage companies such as Movement Mortgage, such as other unnamed mortgage companies, because my mortgage company is the best mortgage company to go through, FYI. But like I was saying, FHA insures a mortgage that is sold or originated from a mortgage company. So if you were to get an FHA mortgage from me, the Federal Housing Administration is going to charge you a monthly mortgage insurance. Now we'll get into that in just a second. Now, one of the really great benefits of getting an FHA mortgage is that it is geared towards lower and moderate income home buyers and homeowners. So why would somebody want to get an FHA mortgage? Well, that's a great question. Typically, the most common reason is because of its low down payment requirement. You only need 3.5% of the purchase price as a down payment for an FHA loan. Whether that's your first home that you're buying or whether it's your 50th home that you're buying, you only need that 3.5% down. Now, all of this is based on the fact that your minimum credit score is a 620. Some companies are 640, and it all really depends on the company that you are working with and the mortgage company that you're working with to get your FHA loan. Some companies out there will go as low as 580, and some will even go lower than 580, but typically when you go under 580 credit score, you're gonna have to put a little bit more money into the pot, aka you just need a larger down payment. Now, earlier in this video, I talked about how the Federal Housing Administration, the FHA, insures mortgages that are originated by FHA approved lenders such as Movement Mortgage, such as other lenders that I'm not going to talk about. Like I said, FHA approved lenders. I don't know if I mentioned that in the beginning of this video, to be honest with you. So where are they getting this money to insure your mortgage? Well, when you get an FHA loan, you're going to pay two types of mortgage insurance premiums or private mortgage insurance. You probably heard it as PMI. Now, you're going to pay half of that, typically 1.75% of your loan amount up front. Now, you don't have to pay that fee out of pocket. That actually just gets tacked onto your loan amount and you just make payments on it like you would any other month. Now, you also have to pay a monthly mortgage insurance, which is a much smaller amount. Now, I don't remember the exact calculation off the top of my head, so I'm gonna put it here in just a second. Now, and that's how your monthly mortgage insurance is calculated on an FHA loan. So now your loan payment consists of your principal, your interest, your taxes, your insurance, your homeowner's insurance, and your private mortgage insurance, also known as PMI. Boom. I think I did that in 3 minutes. I don't know. Let's see how good my editing skills are. Now that you know what FHA stands for and what the Federal Housing Administration does and how it benefits you as a home buyer or even a homeowner that's looking to refinance into an FHA loan, why would somebody want to get an FHA loan if you have private mortgage insurance? Well, if you're over 80% loan to value, which we talked about last week in my last 3-minute Thursday video, if you're over 80% in loan to value, you're going to have to pay a mortgage insurance premium of some sort, whether you're on a conventional loan or you're on an FHA loan. The nice thing about FHA loans is that they are insured by the Federal Housing Administration, so if anything were to happen, if you were to go into foreclosure for whatever reason, because you couldn't make your monthly mortgage payment, your mortgage is insured. There are a ton of reasons why someone would want to get an FHA mortgage, and it all really depends on your situation. You may qualify for an FHA loan, you may qualify for a conventional loan. You may not qualify for conventional, therefore FHA is the route that you're gonna have to go. It all depends on your situation. The best way to figure that out is to get with me, a mortgage loan officer, a mortgage originator, and actually go through the numbers and figure out what options are best for you. Anyway, you guys, thank you so much for watching this video and for watching all of these videos and for sharing them with your friends. Make sure you hit that subscribe button down below, and if you haven't already already done so, make sure to check me out on my social media at Dane.the.mortgage.guy, or also on my website at DaneTheMortgageGuy.com, or the shortened version, DTMG.me. Thank you all, love you all, stay safe, and I will see you guys next week. Cheers, everyone.